who give you strategies every day in order for you to hedge your position in a volatile time like this, what to do with the options market, maybe take some leverage positions to make more money. But just as a disclaimer, before we go on with the show, to tell you that Narayan as well as Nitesh Thakkar to run us through strategies that they have been adopting in a collapsing market, if I can say so. Last week was a very, a very down dip week. You had 2.5% shaved off the benchmark indices. Today as well, with no support coming in from the global markets, once again you've seen Nifty under pressure, below 5,300, down by about 1.5% as well. So you've got activity now brewing in the 5,200 strike put, as well as the 5,100 strike put has gotten active in today's session. Dr. Narayan, is this indicative that you could probably land up seeing lower levels, maybe even reach 5,200 maybe in the coming few days?
Yeah, the way the market has actually panned out, I think we are setting ourselves up for lower levels, no doubt about it. You see, the whole of last week was a kind of a consensus trade. I think almost everybody was bearish, and so the market also traded down bearish, but up to 5,300 everybody was sanguine. But I think the sort of fall that we have had today morning would have certainly shaken up a lot of people, and it would have probably convinced a lot of people to go short at lower levels. Now this is good and bad at the same time. It's bad because it will actually take the market a little lower, maybe go down to the level of about 51 odd levels, where is the next area of support. But in a way it will be good because it will actually create shorts at low level, which could then subsequently come in for a squeeze, and then that would help the upside rally later. But then that is something for later. I think the market is placed to go down a little lower. We have had the strong down into about 5,200 sub, and we are trying to trade out of that trough, but I don't think we are really succeeding so far.
All right, 5,300 put earlier on, which was used as a support level, that has been witnessing shedding in today's session, and like we've already been pointing out, that the level is moving slowly but steadily to levels of 5,200, and then 5,100 is also starting to add up into positions. Dr. Narayan, before we go across and we talk about your strategies, we've had various experts coming and talking about maybe not going short right now because implied volatility is still on the lower side. Could you explain that to us in greater detail?
See, if I have to explain IVs in a sort of colloquial term, I would say, like, you can take an example of a glass of beer. If you pour beer from a little higher level, you have a lot of froth in it. The froth is something like the implied volatility, So to the extent that the froth is greater, the actual amount of the beer is lesser. So right now it seems there is a lot of froth and there is less amount of, lesser amount of beer in the glass. But what it really means is, in a manner of speaking, it is like like the fear index in a market. So when the fear about declines goes up, see, the market, nobody is fearful of an upside collapse, right? They're all actually fearful of the collapse on the downside. So when you have a higher level of maybe fear in the market, you will see an upside movement in the IVs. But the fact that the IVs are going up slowly, it shows that the market seems to be right now rather complacent about the downside. It's not really fearful about the downside. So which is why I actually called it as a kind of consensus trade of last week, that people are actually ready for the market to go down, and therefore they are actually playing it that way, which is why you're not seeing a sharp uptick in the IVs.
And that's why you're not seeing fresh, extra short positions.
Exactly. So they are actually shorting the call and they are making money, so they are happy as the market goes lower. There's no panic.
All right, let's take a check on the strategy. You had earlier on Friday, you had spoken about a ratio put spread, which is obviously capitalizing on a downward move for the index. After today's move, any revision in that strategy will probably carry it forward till expiry?
I think I would prefer to take it into the next week, because that particular strategy was, it is profitable up